Hi guys, this is Money Mike. This channel is about picking high growth stocks and turning $28,000 into 1 million in the shortest time possible. And this video is explaining everything what you need to know about warrants and strategies to make money with them. Does this video have a few hundred views? Good. That means that not that many people know about this. Let's start with an example of what warrants are actually capable of. This is the story of one of the company that we witnessed this year. A 12,000% gains in a couple of months. If you need help with that, that is more than 100x of your investment. You could have bought a warrant of ticker SHLL for 23 cents per share and sell it for $28.8 at some point. You could have become a millionaire in a few months. That brought me to an idea. Well, this channel is about making a million. I should trade warrants, and so I do. Just 2 weeks ago, I sold warrants with the ticker SSPK with 420% returns. This is why I made this video, to share my experience with you. For anyone who want to go this extra mile on this topic, you can follow me on Patreon. Otherwise, enjoy the video. Now, before we jump in, you need to understand that warrants have a certain risk. So before doing anything stupid, you need to make sure that you understand it properly. The hard part is to learn everything. The good thing is that I put most of the important information that you have to know about warrants in this video. So all you have to do is just to sit through it. It basically cannot be easier than that. That still shouldn't stop you to do your own due diligence, since none of this is financial advice. Here is what we will go through. If you already know what warrant is, I think you should still watch this video. I try to include unique information on each level of knowledge, and also strategies and real examples from my trades. So we will go through multiple topics. What are warrants, where to find them, where to buy them, their recent history, risk and rewards, and also how to exercise warrants and strategies. And we will start with what are warrants. In this video, I'll be focusing on special purpose acquisition warrants, because they are one of the biggest opportunity in the stock market, especially coming to 2021. So a stock warrant gives the holder right to purchase a company stock at a specific price and until a specific date. So if you buy one warrant, you essentially hold a certificate to buy one stock of the company for a given price. And that is not always the case. In 95%, yes, a single warrant can be exercised for a single stock, but in the rest 5% cases, you sometimes need more warrants to buy a single stock. The ratio can be 4-3, meaning you need 4 warrants to exercise them into 3 stocks. Common is as well 2-1, 3-1, and so on. If you know what options are, warrants and options are similar. The difference is that while options issued between 2 investors, warrants are issued between you as investor and the company that you are investing in. So the price that you have to pay for a right to buy the stock is usually $11.5 for a stock for spec companies. So for the price of, let's say, $1 for a warrant, you are buying option to buy one stock for $11.50 in the future. That means you don't have to spend the whole $11.5 today, and you can do it later. This is called leverage. You are leveraging the stock to its maximum potential. Well, on the other hand, once you want to exercise the warrant, you have to pay $11.5 per share, which needs more capital. If you hold 100 warrants, you have to pay $1,150 to convert them into the stocks. So here would be the first question that you probably have on your mind. Can I buy and sell warrants without actually exercising them? And the answer to this question is yes. Long-term investors would most probably just exercise their warrants, at the time it would have to be exercised. But if you are only there for a trade, the easiest way is just to sell them. So where to find or buy warrants? Currently around 300 spec companies that you can buy today. So there are plenty options to which one you want to buy. First, you want to choose the spec of which warrant you want to buy. There are multiple sources where you can find this type of information, paid or unpaid. You can get some trial data from specinsider.com or spectrack.net. You should also check the official information from SEC report website. All you have to do is, just search for the ticker of the spec and especially to get information about warrants, you have to find S1 filings. I know this is a long document and it looks terrifying, but after going through hundreds of them, you know what is where. So for warrants, this is what you have to be looking for. You want to know the number of warrants that are outstanding, and also you want to take a look on exercisability. That will tell you of how you can exercise your warrants and under what conditions. Anyone who is investing in SPACs should really read SEC filings or at least be very well diversified. The problem with the SEC, which you will find out, is that to check 300 filings every day, right? It's just absolutely crazy. So many times the SEC is also late with the announcements. Many times warrants are rising and the SEC doesn't even have a new filings. But the information is out there. So it is worth watching multiple sources like PR Newswire, Twitter and spec groups, and sometimes even Facebook, or just Reddit. Just to be sure, not to miss anything, because that could be disaster. And the last option for me, which I can think of, is to have a list of spec stocks and warrants in your broker account and just watch the pre-market price movements. Anything exceeding 20% uptrend or downtrend is suspicious and definitely worth of investigating. For me personally, the data that all these sources provided was just not enough for me, so I did my own spreadsheet that I am keeping daily updated. Here is how I keep track of my SPACs and warrants. Easy to see what phase this company is, and if they are merging with some company, there is a name of the company and also link to investor presentation. I can see updates on two of the most important events, and that is a merger announcement and also merger itself. You can see the split ratio on the warrants. Also, you can see all the real-time data trading on each stock, except warrants, because Google doesn't support that. And also the great thing about it is that you can filter it as you want. By the way, I do share this sheet with my Patreon members. Link is in the description. It is daily updated and it took some time to put it together, so I made it available for a price of a cup of coffee. Okay, once you find the company, and later we will talk about the strategies that I use to find them, now you need to make sure your broker allows you to buy these types of securities. Not every broker allows you to trade warrants. For example, Robinhood does not support trading warrants at the day of making this video. I heard E-Trade does allow that. For Europe, for example, I am using Interactive Brokers. Each broker is different. But if you just want to play around right now, and check some prices, use tradingview.com. If you will type the ticker of the SPAC on the tradingview.com, in the search drop-down will list a warrant that is usually distinguished from the ticker with W. And here you go. Now you know where to find the prices of warrants. Guys, if you like the content so far, and you don't feel like subscribing just yet, that's absolutely okay with me. I only ask you to give it a thumbs up. It is free and this content takes a lot of time to put together. I definitely appreciate it. Now let's get to how much to pay for warrants. What is a good price for a warrant? There is no right answer. The correct answer is it depends. The strategy I use to buy warrants is that I buy warrants in pre-announcement. So I am making my trading decisions based on the historical performance of SPACs, which is telling me, the price that I'm willing to pay or which I'm not willing to pay. So for example, would be a $1 per warrant a good price for a warrant? That depends on multiple criteria that you have to include in your decision. Most of the investors are deciding on the price of the warrant based on the team that is in the charge of SPAC company and who is looking for the new company to merge with. Approach of such investors is the bigger names, the bigger chances to hit the bigger deal. Investors also count in the deadline until the SPAC company has to find a company to merge with. Another significant criteria for most investors is the industry and the market which SPACs expects to find a merger. If you would ask me, historic data would say that most of the time all of those things doesn't matter. I only follow 2 or maybe 3 simple criteria. If you wonder what is the good price per warrant, after announcement, this is the time when the value investing takes place. There's also one important thing to understand, and that is the difference between warrant price and the stock price. The mathematical explanation of how to exercise warrants is the current price of the warrant, for example, $1, plus the price for exercising the warrant which is almost always $11.5. So the total price of the stock that you can get for $1 warrant is $12.5. In the ideal world, and in this case, it would make sense that the stock price of this SPAC would be $12.5. And that is often not the case. And this is where a lot of people get confused. So here I will explain why we see the price of the warrant and stock disconnected from the actual price. In some sense, it doesn't sound smart to buy warrants if the price of the stock is below $12.5. Mathematically, the price for exercising the warrants would always result in a higher price than you would buy a stock. But think about this angle. With warrants, you are buying on a leverage. Let's say you want to buy a SPAC because you believe in it. You can buy a stock for $12 or you can buy a warrant for $1. The today price for the warrant doesn't make sense because in total you would pay $13.5 for exercising warrants instead of $12.5 for just the stock. But what if you expect the price of this company to rise in the future to $18? Now this completely changes the game. Imagine a scenario where you have $100. For $100, you can buy 8 stocks, and after reaching the price per stock, $18, a $144 worth of stocks, making an extra $44. If you buy $100 worth of warrants for $1, the warrants price, as it gets closer to expiration date, the warrants will meet the difference from $18 minus $13.5 for the exercising warrants, which would be probably somewhere around $4.5 per warrant. So your $100 is now worth $450, and that's the difference of $350 compared to $44. But there is a catch. Warrants by the rules are exercisable in 5 years, yes. Some companies can call the warrants if the stock reaches a certain price, usually $18. This is what happened with Hyliion, where I think it was 1 month after the merger, they called all investors to exercise their warrants. Suddenly, you are forced to give up your leverage and pay the big bucks. It doesn't make your investment worse, but you are forced to invest more capital where either you don't have it or you don't want it. Then you should also know something about the history. If you don't want to get caught off the guard, you have to know something about the history of the SPACs and also warrants. I went through a lot of data until I decided what strategies I will actually use, because I want to minimize my downside and maximize my upside. In a trader world, going through this historic data would be called backtesting, and that is simulating trading on historic data. The problem is that you cannot really go through 2018 and 19 because the SPACs just were a different game. Industry of SPACs had quite a bad reputation before 2020. There were low quality deals and also lower quality of investors. That changed. Today you can see the best known investors in the world joining the SPAC trend, trying to make companies public. And that had a huge impact. The problem is that as more people know about it, the cheapest warrants you could find, these warrants are 3 times expensive than what you would find 6 months ago. I believe soon we will hardly see warrants under $1 or $2. SPACs move very much with the whole market. If the market is down, then SPACs also go down, sometimes with amplified volatility. I think it is because most of the investors would consider these stocks more speculative, and so it is being the first stock to liquidate if they need money and if they want cash. If you are not ready to take a hit at least 30%, or even more, and you didn't develop a strategy to avoid it, then you probably shouldn't trade SPACs. This is why you need to know a history to have constant awareness of market and to also understand why the current market is dropping. Once we are going to be in a SPAC bubble, it is important to cover your positions. So this was just a short comment to the history. Now let's go to the topic how to exercise warrants. But the first thing that you have to understand is when you should or would exercise the warrants. Usually the rules are that you can start to exercise warrants 30 days after the merger. These rules can change from company to company, so check the SEC S1 filings just to be sure. In general, you would want to keep warrants as long as you believe the company. That provides you the benefit of having the leverage. There are usually some ways to force you to sell warrants earlier. First is the deadline of each warrant, which is usually 5 years, which is plenty of time, so you don't have to worry about it. There is also a rule that if the price of the shares rise above, for example, $18, then the company can call warrants in order to collect the money from the investors. Okay, so if you got called or you want to exercise your warrants, how to do it? The easiest way to exercise a warrant is through your broker, meaning you will not be the one doing the paperwork and corresponding with the company. But with every broker, you will have a different process. The best way is to contact your broker directly and tell them you would like to exercise your warrants in your account. And, then they will probably do that. Once the broker has contacted the issued company, the exercised warrants will disappear from your account and the stock will appear. It's like a magic. Your broker will likely charge a fee for the service. Sometimes the fee is optional, so you can refuse from paying that, but good luck with that. By exercising your warrants, you have to understand that you are diluting existing shareholders. This means that if there is a 1 million warrants on the market, there is going to be a 1-to-1 warrants ratio. The 1 million new shares will be added to the company, increasing the total numbers of shares outstanding. And now risk and rewards. Warrants are giving you high leverage and with that high risk. High leverage means that whatever the outcome is, either it's going to up or down, it will amplify the outcome, which means you can lose a lot of money or get a lot of money. This is where you should understand that warrants are highly risky investment if any unexpected event happens. And we saw that with SPACs. It's not likely that the risk is not existent. Here are some of the risks that you might face, but this is not the complete list. Many SPACs are the type of the companies that could be a hero or a zero. Not long ago, a space travel company, Momentus, announced a merger. I don't judge the business, but it is quite speculative stock. Many companies in the SPACs are unproven yet and are still at the stage of drawing board. You should be ready to lose all your money with each individual company. The second risk is the merger doesn't have to go through after the announcement, meaning company did not settle. In the case, chances are that the price of a warrant significantly drops and you will have to wait for the SPAC to find a new company. If not, and the SPAC will reach the deadline date, your warrants will expire worthless. Zero. Third risk I see often is to trade the warrants price instead of the company. Buying warrants because stock is popular and you expect it to go up can lead to significant losses. Warrants primarily exist for long-term investors that have a high conviction of the business for the future. For others, warrants are more of a voting machine and you never know where the price will go. The last is the untold risk of warrants, and that is liquidity. And you really don't hear many people talk about it. Not many people will tell you that some warrants before announcement are trading just hundreds or thousands per day. If you buy a 1,000 warrants, you might be the only person that day buying those warrants. This is causing the problem with liquidity. What happens if you buy a $10,000 worth of warrants and you want to sell today? You might have a problem of selling them. Warrants, or in better case, to sell in a much lower price that you can see on your chart with your broker. That being said, after merger and announcements, the liquidity is usually high. And now let's talk about strategies. Unfortunately, there is not enough time, but this is the most exciting topic. I believe my style of investing is different from the others you can see. I'm not a value investor or speculative investing, it is something from both. What I usually will invest is a high growth market combined with a high growth company. I believe that all it takes is to be successful in the stock market is just to be one step or more step ahead of the market. And the market focus right now on the SPACs, and this is why I will dedicate 2021 to investing in SPACs and warrants. But hey, that might change. Here are some of the strategies that I'm currently using. I will go through them very quickly since I will dedicate individual video to some of the strategies, or I'm already sharing these strategies in my Patreon group or even on Facebook. And the first strategy is buying pre-announcement. My current and most favorite strategy with a little downside. So basically what it means is that you buy a cheap warrants without spec knowing the target of the company. There are many criteria which you have to follow, but this is definitely interesting strategy that in my opinion has a low downside. I will try to make video about it next time, but this is basically what is right now my 100% portfolio in specs focusing on. And the second would be buying after the announcement, which I would preferably do on a down sentiment. This strategy is based on the spec lifecycle and catalyst behavior. In about a few weeks after the announcement, usually the spec will meet the decline back to $10 and then go back even higher. I actually made a whole video about this strategy and it actually worked, but it was kind of a bumpy ride and I didn't really feel that comfortable about this strategy. I hope it will pop out right now on the screen. You can go and check that video out. And then the third is buying for a long-term investing. From time to time, if you are a value investor, you can find real gems, that have a good potential and are undiscovered. There are not that many companies with solid revenue, but there are some. If you take the time to investigate each and every spec, I'm sure that you will find a good company where you can see the value in the future. Good example would be a Tattooed Chef or DraftKings and my current discovery, Weedmaps. Unfortunately, there is not enough time to explain everything in this video, so I will post more videos on this topic. Let me know what you would like to hear about. So make sure that you subscribe and see you guys as always next time.